muni bonds.
Yeah.
Now, did Meredith Whitney, how wrong was she last year?
She was pretty right. It was actually December 2010. It was just before last year.
Well, but it was for
you may remember she went on CBS and she was predicting hundreds of billions of dollars of defaults. I don't think she ever put exactly a time frame on it, but this was a big opening research piece when she launched her own firm.
What are you saying? Are you implying that she did this to get headlines to promote her material? Is that what you're insinuating?
I don't imply anything.
Okay, I don't want to imply anything either.
I'm just saying,
okay.
You know, just saying.
Yeah, just saying.
Yeah, so actually last year, you know, muni bonds in general were up mid-digit percentage gains in terms of total return. You know, that was better than treasuries, better than high-yield corporate debt, way better than stocks, obviously. Probably not as good as gold, but, you know, not bad.
Right.
So
the muni market was good, and there were a few of these bankruptcies, but they were kind of these oddball cases like Jefferson County.
Yeah, and they've been known about for a while, and they were pretty specific. They were usually linked to a certain project, like that incinerator in Harrisburg, Pennsylvania. Right. In Jefferson County, it was the water system. So we haven't seen those widespread, you know, defaults.
Let's look right here, though. This is interesting. This shows those segments which will give you the highest default rates. And community development districts, I don't even know what that is.
Those are guys who are basically, you know, building out areas in cities. They get a bit of state backing.
Is that like an inner city development thing?
And it's basically, it's real estate development.
Assisted living? That's for old people?
A lot of them are in Florida.
Independent living. What is independent living?
It's another retirement home.
It's another word for
category.
Old people. Nursing homes, also old people.
And they're all exposed to real estate because the essential model is, okay, you have an elderly person. What will tend to happen is you will sell the homestead. You'll use the proceeds then to fund however long you're going to live in a retirement home. Now, obviously, what's happened is you can't sell that house. You haven't got the funds to do it. These homes were built on the and financed on the presumption that people would keep doing this, and so that model has broken down a bit, and that's why you're seeing defaults in that area.
Right, and do those,
but these are tiny parts of the overall market.
Right, tiny parts, and so we don't want to overstate the problem. Geographically, would these defaults tend to map where there were real estate problems in the U.S.?
Yeah,
like
I mean,
Florida,
the community
Nevada.
development one is, you know, that's Florida, it's Alabama.
Right.
I think almost, I seem to remember hearing, I think almost half of those defaults are in Florida.
Right. If you're a muni bond investor, what is the most important thing to you in 2000? It's really what happens to long-term yields, though, isn't it? Isn't the most important thing what happens to the overall bond market, not so much, you know, the individual default rates?
Yeah, exactly. I mean, I still think this idea that we're going to see a wave of defaults happen, I don't think that's going to happen.
Right.
I think the point I'm trying to get across is that last year you made a double, you know, mid-teens return. You're not going to get that this year. It's not necessarily the case that you're going to suddenly crash out, but the fact is yields on these things now are very low. A 10-year AAA is now about 3%. Adjusted for the tax benefit.
Adjusted for the tax.
Right.
Important note, it's about 2%.
That's only, okay, that's 1 percentage point more than you get on a treasury. But then again, with municipal bonds, you know, the disclosure's pretty terrible.
Right.
They're not as liquid. It costs you more to trade them because you have to access
if you really want to own
brokers.
muni bonds, you might as well just own an index of muni bonds.
Of
right?
muni bonds, exactly.
You don't need to go out and get your broker. I need some, you know, Topeka Water District.
And particularly these days,
bonds.
you know, with the insurance wrapping going away, you really need to do your homework on these things.
And why do it? You can buy just an index fund of municipal bonds funds. You'd be fine. But watch the bond yields, right?
Absolutely.